Ladies and gentlemen of the crypto space, we're live on Wednesday at 11:38 a.m. We're a little late to the party today. It's all good. My camera's acting up today already. Joy. Let's see how long it lasts. Today's topic, up or down, doesn't matter. One Bitcoin is one Bitcoin. So we're going to entertain that story, that narrative a little bit today. It's an exercise of philosophy, our monetary philosophy. And it's not a loaded question. There's significant merit to participating in that approach to value storage, especially considering what's going on in the macroeconomy. It's not. It's meaningful to entertain it. There's obviously implications, especially in the face of an asset that's potentially depreciating in dollar-denominated value. But it doesn't mean you need to shy away from the approach to how we view value storage. And and I think that probably the best way is the contrary. Clearly, dollars are not a vehicle for value storage. They're guaranteed to lose value over time, 8 to 12% a year, according to the Chapwood Index. So, what does that mean? So, that means simply we must entertain another vehicle for value storage, and basically almost anything else is going to be better value storage given enough time. Over enough time, it doesn't matter what asset you hold, as long as it's not dollars, and you're going to be able to retain value, if not experience value appreciation as the dollar depreciates in value. These other value storage vehicles will appreciate in value over time, pretty much guaranteed, considering the depreciation, the guaranteed depreciation of the dollar. Today's stream, along with all streams, is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto. Non-custodial, DeFi, or nothing at all. Bam! Let's bring it over to the main screen and see what's going on. Who's in the house? Heirloom's in the house. Captain Weber's in the house. Crypto Checky, yes. Richard's in the house. White Wolf Barry. Oh, it's the crew. Jim A's, yeah, sideways. It's probably a good word to describe what I'm seeing in the charts right now. We're going to take a peek right now. Igor's in the house. Christine Lagarde says today Bitcoin is a funny business and needs to be regulated similar to global scale. Cool, great. We want it to be regulated at a global scale. Pop it over to the Bitcoin chart. So, there's a couple of patterns in play. If you zoom out to the daily, you're going to see, probably see it better on the 4 hour. You see a head and shoulders. So notice that the left shoulder, the right shoulder, this is a bit higher than the left shoulder, so there is a bit of an upward slope. There's a couple of different patterns. It's not just the head and shoulders, and that's not the way charting works. Um, there's an upward trend to the 200 EMAs on almost all of them, even on the 4 hour. Clearly, we're about to have a Stoke bearish signal cross. MFI is a little bit weak on the 4 hour. RSI is towards the bottom of the field. But then you zoom out to the daily, and we're completely oversold. We hit oversold. We have a very small uptrend in Stoke, and it's pushing for a bullish signal cross. And basically, if you look at the MFI, which is volume adjusted RSI, it has a rounding bottom, and that's very meaningful. It's non-trivial. So what we have is contradictory technical data, particularly on the 4 hour and the daily. The head and shoulders more visible on the 4 hour, and if we go into the 30 min, so we get some detail. We clearly see we have convergence of the moving averages. We have the 200 SMA converging on the 200 EMA. We had pretty much a symmetrical triangle compression, higher lows, lower highs. It is a bearish symmetrical triangle, in my opinion, with the first leg being significantly down. Obviously, there's symmetrical triangles with the first leg being up, which I would say that the triangle compression tilts a little bit more bullish. Symmetrical triangles don't have, they're break direction agnostic, but I do get the feel of a bullish or bearish overtone depending on the first leg. So this is a weak bullish breakout of this triangular compression. Notice that it's trending horizontal, still below the 200 EMA on the 30 min, still below the 200 SMA as well. But then we go over to the 15 min, and notice that we're still pretty good on the MFI, about half the field, half the field. And there's plenty of room to the upside on the Stoke as well as a higher low. So that is a bullish technical observation. So notice on the 15-minute, we're completely trading horizontally. It's absolutely incredible for the period of time since the break to the upside through resistance. But we're under the 200 EMA on the 15-minute. This is quite interesting. And look at the convergence of all the moving averages. What is that? That's the 10, the 50, the 100, the 20 SMA, and the 200 EMA. It's basically they're sitting on top of each other. This is actually an incredible sight if you zoom in. So literally, so this is why it's trading horizontal. You have Bitcoin price action sitting above almost all symmetrical moving averages right now, pinched between the 200 EMA and all symmetrical moving averages. This is an incredible sight. And notice that we also have a compression on the Stoke. We have lower highs and higher lows as well. RSI and MFI about half the field, so they're in a good position to break to the upside and the downside. This is basically a period of time where you don't know where it's going to go. You have bullish overtones as well as bearish overtones, and basically have a compression. You have pressure from the top side and pressure from the downside, pushing it in horizontal price action. I really like looking at the 15 min right now. This is crazy. A break to the downside would be significant through these moving averages, but then you got a fair amount of support. I mean, you still have this trend line, which you'll extend. You have the purple line, which is price action support, pushing back towards before the rip to 40K. You got a bunch of EMAs to the downside. Where is it? The 4 hour? Yeah, the 4 hour is obviously at 30. So the 4 hour 200 EMA. Where's the 200 EMA in the 1 hour? So that's where it is. So if we break through the 30 min 200 EMA, you got the 1 hour 200 EMA to the upside. And you still have obviously the 15 min 200 EMA to the upside. This is an incredible compression to watch. This is literally ranging between the SMA, all SMA moving averages, and the 200 EMA. Absolutely incredible. Well, where this breaks, actually probably my eyes are right now on the 15 min, and this really tells everything. The story of why it's literally going horizontal for this hours, several hours, pinch between those EMAs. The algos must be like buy, sell, buy, sell, buy, sell, buy, sell. Crazy. Daily EMA seem pretty strong. Daily, let's take a look at the daily Jimmy's. Jimmy's, yeah. I don't have I have, well, the daily, you don't want to see the daily 200 EMA. I mean, that's way down there. This thing's down at 17 and change. And then the SMAs are still incredibly low. So the SMAs and the EMAs, you're not going to want it to hit. You're not going to want a mean regression on the daily. So, um, I'm a big mean regressionist. I think there's gravity, and things tend to push towards the average, towards the mean. But this is a big dip to the downside, and the counter argument is the prevailing big picture story, the macro story about what's going on, about the financial system, about the instability in politics, and the fact that the House is going to impeach for a second time today, global monetary policy, the inflation trade, the printing, socialist programs and tendencies, and UBI, and it's really hard to say if we could, there's I'm a big fan of mean regressions. Do I want a mean regression? No. Does it matter in the long term? No. I don't think it matters in the long term if we have a mean regression on the daily. Let's say, was that a 100 SMA, 19,000. I mean, that's bullish because if you hit a meaningful SMA or an EMA and you bounce, that's serious support. And that'll reset the oscillators on the weekly and the monthly. So bear in mind, guys, these are technicals. These are oscillators. They don't tell you shit about what's going to happen. Peter Brand will say, you know nothing about what's going to happen. but these give you potential insight on what's going to happen. Just because you're below an SMA or an EMA, and mean regression is a powerful force, or the RSI is overboard, the MFI is overboard, the Stochn is overboard, it doesn't matter. The price is going to do what the price is going to do based on supply and demand principles. So all we're doing is looking at technical data, trying to get a glimpse of what the price may do. I mean, listen, if there's an incredible shift in geopolitical power and financials, you'll see the oscillators completely overbought. Just all of them, just straight at the top, and it'll go straight across at 100 on all of them, just maxed out, and it's just going to keep going. It'll just go straight across, and it'll just keep getting bought, keep getting bought, keep getting bought, and that's what you'll see. So the chart tells the story. What's going on right now? Um, and really, the 15-minute is where my eyes are because it gives you a good indication of how the algos are trading. Lots of algorithmic trading in the space. It's completely horizontal, obviously above all the SMAs and below the 200 EMA. And that's it. That's the story of what's going on right now. I don't really know what can I say about the head and shoulders that we see in the 4 hour. I don't know. It's an obvious pattern. Got a bump, got the big rip to 40K, and then you got another rip to the upside. So you got conflicting technical stories going on, and I get here. Check it out. Let's go back to this story. Up or down doesn't matter. One Bitcoin is one Bitcoin. So it's easy to say that in the face of an asset that's depreciating in dollar denominated. One, you're valuing an asset in dollars, so that has a sour taste to it, considering everything that we talk about on the stream. And two, what's pertinent is really if Bitcoin achieves its manifest destiny, as I tweeted this morning. That's what counts. That's your store of value reference. What matters is how much Bitcoin you have and not how much dollars you have, because Bitcoin is going to significantly outperform dollars over enough time. I got a shirt from Raoul Pal. I ordered it. Irresponsibly long. That's what he says about his position in Bitcoin. He is irresponsibly long. I subscribe to almost basically everything he says, and a lot of what just some great minds out there, and Lynn Alden is absolutely breathtaking to listen to. Um, and they all have basically the same destination, a Novogratz. They all have the same destination. The destination is this is an asset that's going to find a position in the global macro financial system as an unprecedented store of value. So in that statement alone, who gives a shit about the dollar value? We know where it's going to end up given enough time. And if it dips down, you get more if you buy. So you get money on a weekly basis. You have a recurring revenue stream from employment, and you can buy more. If it goes up, you buy less. But where you store your value is denominated in Bitcoin. So the more Bitcoin you have, the more savings you have. There's complete validity to this perspective that we can subscribe to or not subscribe to. And then there's obviously traders that will, not traitors, but traders that maybe traders, the Bitcoin traders, where they sell high, buy low. And they could increase their value storage, but there's obviously notable risk associated with buy low, sell high, and that's not something I talk about too much on the stream. I don't advocate it. I advocate obviously strongly for a diversified, logical, risk-adjusted portfolio, and you're targeting disruptive assets that have the potential to experience asymmetrical price appreciation. The interesting thing is that that's the gamble unto itself, because the alt assets have the potential to asymmetrically appreciate denominated in Bitcoin, not even in dollars. I mean, these are here. Let's take a look at synthetics. It's absolutely crushing its dollar denominated value. But let's take a look at Bitcoin for a second. Zoom out. I mean, come on. This is absolutely crushing Bitcoin denomination. Check this out. It's killing it. Incredible. Look at this rip to the upside in Bitcoin denomination in the last since November 20th, basically the month of December, 184% up in Bitcoin denomination. So if you had one Bitcoin, You have 2.87 Bitcoin. Wow. Wow. Wow, wow, wee wah. So trade Bitcoin, take on the risk of a leveraged position, 1x, 2x to the upside, long or short, or just hold an alt asset that has an incredible macro narrative. Fits into the global financial system. Synthetics with their imminent L2 optimistic roll up launch. And this thing's appreciated 187% in a little over a month, less than a month and a half. Incredible. Oh, I didn't show you. Sorry. Yeah, synthetics. Sorry, Heirloom. Sorry, Captain. The captain. So the synthetics is up 187% since November 20th. And basically everything I said, and this is the chart that I was talking about. Synthetics been absolutely crushing it with its L2 optimistic narrative. I expect with L2s to be a black hole for value. I expect value to flow in and for it to not to flow out. People are not going to want it to flow out. And I believe synthetics is going to be the first wide scale large scale launch of a platform that's going to draw in significant value, other than probably Loopring's AMM, which is obviously absorbing a huge amount of value from the DeFi space, but Synthetics has a larger scale and scope. And it has a more broader set of features and functionality as compared to Loopring. Synthetics and an entire ecosystem of synthetic assets and trading and options and derivatives and synthetics. So I expect. I mean, listen, what's Synthetics trading at right now? Synthetics is at $14.87. It's got as high as $15.90, and it was trading at the beginning of 2020 at 70 cents, and even cheaper in 2019. So this thing is up 2,000% alone. 2,000 over 2,000% just between the beginning of 2020 and now, and that's kind of what Aave did. You know, they're up a couple thousand% as well. Absolutely incredible. Yeah, synthetics is absolutely killing it, Heirloom. Captain Weber it's incredible, and it produces 30% yield derived from inflation. But there's an accompanying supply disruption component to get value into the ecosystem. You're locking synthetics for to mint SUSD, so that is complete supply disruption, which has obviously overwhelmed the inflationary pressure that is created by the emission of new assets to pay the yield component. Um, so this it's all game theory, and that's what's playing out with these DeFi protocols. They're playing with the gamification and the numerical configurations of the platform to see what works. And that's why this is all on the cutting edge. This is all year one, guys. All of this started at the beginning of 2020. It just started. They've been working since 2017, 2018. Avi's been around. Bancor's been around. Uniswap's been developing a long time, and it all just started last year. So this is all brand new. And when we're talking about gamification, we're talking about incentive systems, the psychology about incentives and encouraging particular behavior. And they're trying to anticipate the response people will have to particular, as they're offered particular options and choices. Just massive amounts of psychology involved in the gamification design to these platforms. Incredible. Well, not gaming, yeah, not, but gamification is what I'm referring to, Heirloom. But gaming, yeah, it's absolutely massive. And NFTs, I think that's a little bit further out. I'm big into Gods Unchained. I think those NFTs are going to be worth an absolute fortune, considering the size of the planet, the amount of financials in the planet, and just the limited supply. The NFTs on Gods Unchained have an extremely limited supply relative to the population of the planet. And you got NFTs running around at 33 Ethereum. Yeah, so they're already worth, like 40, 30, 40, $50,000 for a single NFT on Gods Unchained because they have a function. They're incredibly powerful when you're playing with them. They have there's quality associated with them because you could have cheaper versions and more expensive versions of the asset, and they're more expensive because they have a different color and they're rarer. There's less of them. So yeah, I just NFTs and gaming, big deal. It's a big deal, boys and girls. It reminds me of like Diablo 2 back in the day, or World of Warcraft, and the accumulation of these digital assets. And historically, they were centralized implementations, but now they're going to be interoperable because they could be NFTs, ERC 721s, and or whatever's going to emerge on Polkadot, Cosmos, Cardano, and other platforms, Elrond. Um, any platform that has smart contracts will be able to have this type of tokenization functionality and facilitate interoperability, especially with interoperability protocols like Rent. So, in theory, you could have different features and functions on one chain that only really exist on one chain, the smart contracts on one chain, but they're interoperable and consumable on other chains, which is exactly what's occurring with the monetary velocity in the Ethereum DeFi space. You're seeing value come in from UTXO assets, particularly Bitcoin at this point, and it's being consumed and utilized on the Ethereum DeFi space. Absolutely crazy, 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 crazy. Captain Weber, BNT, SNX, Ren, Rook, all going 10x. So BNT did go 10x earlier in 2020. So did Kyber. I got to keep an eye on Kyber. I think they have great choices, great protocol design. And they're probably in a similar camp to BNT with regard to price. They experienced basically a complete retrace of the entire 2020 price appreciation experience. But they have the most incredible protocol properties. A burn component with incentivized supply disruption. You can't get more deflationary than that. Might be the best protocol properties in the entire DeFi space, but I don't own any because they've been absolutely killed. And the incentive, the yield, is kind of small. The staking component. I really think they should increase the burn component, or redirect more yield towards increased incentivized supply disruption, and I think that would that obviously that'll improve price point because that's a deflationary pressure. But this is what they have to do, and this is what the governance is for. And if they did that, we'd start to see the numbers tick up. And if you notice on Bancor, they've been basically obliterated, but they've done that, and let's look at USD. They basically did that, and they've been experiencing price appreciation. Let's go out to the monthly. So there you go. That's a heck of a rip to the upside in dollar denominated terms. Price range. Well, what's that? Is that February? Are they really up 2,000% since last year? Yeah, I think they are. So here's the big dip. So here's the rip. They're up 263% since the middle of last year, and that's cool. And that's what the repercussion. And actually, this is quite bullish from a monthly perspective. Seeing the Stoke bottom and actually do a bullish signal cross with the MFI relatively high. That's really cool. Especially Stoke indicates that likely going to experience appreciated price action in the short term, and the MFI being this high, that's pretty cool. RSI has some catching up to do, but the volume has been high, and that's why the MFI is higher. So the volume MFI is volume adjusted RSI. Heirloom video, yeah, that's another story. Santiago Velez likes decentralized video and streaming and so on and so forth. Brendan, can you explain the relative market cap FDV ratio of a keeper? What do you mean market cap to TVL? Yeah, well, what do you keep it? So Rook is obviously very premature. We don't know really anything about what's going to happen to the platform until February 1st. I added a little bit to my staking position, trying to accumulate a little bit more Rook without paying for it. It's emissions yield. I'm quite bullish on Rook. This was a tiny portion of my portfolio. My position was at $70, high 60s. And obviously, it's running around at 182, so I'm up 300%, give or take, which is pretty cool. Not going to complain. Aave, still have a position in an Aave, relatively small, but the big picture story for Aave is there's going to be a central component of banking. They literally have a banking license in the UK, and they'll be able to issue real estate mortgages. That's crazy. And people will be able to provide the liquidity for them and get the interest payments from them. Whereas historically, those interest payments will go to a bank. Now they go to the general public in a crowdsourcing kind of fashion by providing liquidity in the form of these liquidity pools that we've been experiencing with the DeFi space. So I have a small position, like 40 Aave, give or take. It's not large, but it was much cheaper. Everything I bought was much cheaper. It's just appreciated over time. That's the name of the game. Buy low, hold high. And the reason I have no interest in liquidating this stuff is because they're recurring revenue streams. Aave is spitting out 8%. Throw your Aave into Bancor and it's throwing out 15%, 20%. I mean, we could take a look while this loads. Aave's big, and the BNT has proven to be effective. The um, uh, impermanence loss protection is covered by the transaction fees, which means it's a sustainable process. And there's a burn component, which is a deflationary pressure to compensate the inflationary pressure that's created by the impermanence loss protection. So the analysis that many people are from this experiment are seeing is that it's a sustainable process, and that's pretty cool. So the protected value, the claimable value, they'll just keep going up. You're getting yield all over the place, and look at the yield. Look at the yield on some of this stuff. 200% BNT, 257% BNT, hundreds of percent on your Bancor. And to top it all off, you're getting a yield denominated in an asset that's likely to experience asymmetrical price appreciation over enough time. Um, Matt Peony, man, thank you. Appreciate it. I try my best. I hope I help, guys. That's the only thing I could hope to do. Good day, my caregiver. Happy to watch you briefly talk about these readings. It's Sammy, my man. Always a pleasure. Always a pleasure, my friend. So, what could I say in conclusion? I think, here, let's take a look at CoinGecko. I mean, you'll see what's hot today, particularly because of everything that we talk about. The story is just compelling. The monetary velocity in the DeFi space is through the roof. Thorchain is interoperability. It's a hot topic. Ren is down here. Look at that, 7.2%. 7.2%. The bank gives you 0.02%. You're dying in a bank account. And the story has never been stronger. January 13, 2021. President's getting impeached for a second time. The global financial system is on the verge of a historic reset as the strongest financial players in the world. That's all they talk about now, that this is an opportunity to reset the financial system given all the prevailing debt. And you got assets that are ripping 7, 10, 20, 30% in a single day, and people are sitting with their dollars losing 8 to 12% a year in a bank account that's giving you 0.02%. I'm sorry, those are the losers. I got a healthy bank account balance because you need to be able to cover overhead. And as Rohan Gray would say, my debts, my obligations are denominated in dollars. So I have enough dollars to cover my debts. That's all you need in a bank account. You have enough dollars to cover your monthly overhead. You have enough dollars to cover a couple of months if you experience a black swan event personally, loss of employment, disruption of your income, and you cover yourself. But your value storage and your future has no business being in dollars. That's the losing position. So the question really becomes, what assets do you hold? Now, real estate is a complicated process. It's a complicated game to play. So some people choose that. I have gold is good. Gold, silver, gold miners, silver miners. I think the commodities are great over the 2020s, particularly the battery metals, lithium, cobalt, graphite, and nickel. And clearly the crypto space. I think the DeFi plays are absolutely going to be systemic components of financial infrastructure. I think Bitcoin has overwhelmingly proven itself to be a store of value over time, up hundreds of percent a year, nominalized over the course of a year, over the course of a decade at this point. It's up hundreds of percent a year. Gives a shit if it dropped from 20,000 to 3,000 if $3,000 is 10x what it was the year before. So you hold it, and that's where you accumulate as much as you can. It's the logical course of action. What is happening with the dollar? I got the charts up. So the dollar is pushing higher. It's out of oversold territory halfway through the Stoke field. There's 200 EMA resistance up ahead on the 4-hour. This prevailing trend that you see here, these red lines, is a very large falling wedge. So that's very it's a very bullish trend formation, or not necessarily bullish, but indicative of trend reversal, that there will be a break to the upside at some point. And we often see, especially with a weak asset, um, a bit of horizontal price action when you break to the upside, or maybe if there's just a complete change in the macro narrative, you see a massive shift. I mean, look at this. That's a rip to the upside if you ever seen one. And the dollar, that just this crushes everything. That crushes equities, crushes it. So we'd have a very big event if that dollar started ripping to the upside. Let's go back to the 4 hour, where the 200 EMA is just above head. So here's the question: you have a top here, it hit the 200 EMA. You maybe have enough velocity or stoke acceleration, given that it's basically a derivative of RSI. So I liken RSI to like velocity and stoke to acceleration. So maybe the correct physics analogy is momentum. Do you have enough momentum to push through the 200 EMA to the upside? Um, do you even have enough momentum to get to the 200 EMA on the upside? I mean, this is bearish. This is resistance that held. It held. So you might not even have enough momentum to get to the 200 EMA on the upside. So this is obviously firmly bearish territory. This is a bearish chart. The 200 EMA is sloping to the downside, held as resistance. Does it have enough momentum to get to previous resistance? The breaks to the upside, that's quite bullish and quite bearish for equities in the crypto space. This is really all eyes on. And was it Jeff Snyder? Talks about this is really like a euro dollar chart because it's dollar versus 57% euro, something like that. So it's not really the best representation of the dollar, but it is effective at visually depicting a crushing force on the equities and crypto space. So that's the deal with the dollar. What else do I have? I have the 30-year Treasury up, which has been very much ripping higher. It's about steady for today. But look, Stoke overbought and below the guppy, so there's significant resistance above head, and this is on the monthly. So Stephen Van Meter, this is where you say the kingdom is protected, and bonds will tick up in price as yield drops. I think there's resistance above head, and this is definitely a good looking chart for the bond trade. 40 AVE is pretty good hold, but can the market cap increase? Seems maxed out. If AVE becomes a global financial lender comparable to banking institutions, it's going to be worth hundreds of billions of dollars, if not trillions of dollars. And that's the speculative play over the course of years. Let's say 3 to 5 years. You know, it's over 1.5 billion today. What if it goes to a half a trillion? You know, the inflation narrative has put Apple, Microsoft, Tesla pretty damn close to the $1 trillion mark. It's trivial to be a $1 trillion company, given the amount of money, M1, M2 that's circulating. So why can't Aave be a half a trillion dollars, given what it's doing? It's literally transforming financials and lending and democratizing lending, where the general public can participating in what historically was a bank process. This changes everything. So as I say all the time, you don't need to hold large positions. If Aave fulfills its destiny, a small position, 40 Aave, it's going to be worth a $500,000. That's the way it works. Can you show me best place to stake my link? I don't know. I don't participate in link. My recommendation or my opinion is that it's highly technical to run a proper node, run a proper link node, because you got to run services, facilitate functionality for the people consuming the protocol. I don't know. I'm not. I'm very bullish on Link. I think it has just a disruptive functionality. It has the network effect. It's the first. There's others, Ban, Teller, but Link is Link, and it's going to outperform over enough time. So I don't know. I'm sorry. I'm not a Link holder, unfortunately. Love it, but you can't own everything you want to own, and that's the name of the game. White Wolf said, watched a Stanberry Research interview with Fritz Lancy on YT. His opinion is that the Fed government won't let Bitcoin and DeFi take out the banks, along with thousands of white-collar jobs via automation and DeFi. Yeah, but you had Brian Brooks the other day say it's not about taking out the banks. The banks are going to evolve. The banks are going to buy these protocols, or they're going to consume these protocols, and these protocols are quickly becoming public utility. This isn't about competition. This isn't about this taking out the banks. This is pretty much what Tesla's doing. Tesla forced the entire automotive industry to change. A first in 100-year experience that's ongoing. It's going to go on for starting in the 2020s, and it's going to play out over the next 20, 30 years. The whole industry will change. And that's what's going to happen with the crypto space. It's going to trigger a reflex action in the traditional finance system and the companies involved, the banking system. They're going to want to consume these protocols because the general public is going to want to use them and have access to them, and they provide functionality and features that make existing systems seem deprecated and frankly pathetic in comparison. So it's not about taking out banks. It's about disrupting them and forcing them to respond, much like Tesla has forced the entire automotive industry to react and respond. They have disrupted them. That's the deal. Yeah. Oh, YouTube. You watch YouTube. My man, White Wolf. All right, guys. 12:14 a.m. January 13th. It's always a pleasure. Thank you for joining. Thank you for listening to my words. I hope it makes a difference. Never go all in. Never spread too thin. Size your positions accordingly. Do not take on excess risk. I'd flip back to the Bitcoin chart, but I'm going to wrap up the stream. Smack those thumbs up buttons. Tell everyone to subscribe. And today is Wednesday, so we got 2 more wonderful days this week. Stay tuned. Have a wonderful day, and I will see you tomorrow. Peace.